Hey, everybody, and welcome to Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and their professional teams struggle to find great capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is the best way to exit your highly appreciated assets tax deferred so you can grow your wealth. I'm your co-host, Pearson York, filling in for Brett Swarts. In each episode, I'm joined by some of the best wealth, business, real estate, and leadership individuals in the world to share ideas, deal stories, and inspirations so together we can make complex tax deferral strategies simple and passive income plans achievable. We're streaming on expertcresecrets.com, Capital Gains Tax Solutions YouTube channel, the Kingdom Luxury Realty YouTube channel, and the Kingdom Luxury Realty Facebook channel. And I'm super excited about our next guest. He's been at Colliers for the last 14 years. And before that, he was a stud over at Marcus & Millichap doing multifamily acquisitions and dispositions. And I'm very excited for you guys to meet my good friend, Matt Sarro. Matt, how you doing, my friend?
What's happening? Doing well. Thanks for having me. It looks like the video didn't brighten up yet. That's okay, but everything's good. Thanks for having me.
Yeah, absolutely. Well, listen, it's great to have you on the show. And before we get started, why don't you tell us a little bit about your background?
Let's see. Background. I'm born and raised here in Sacramento, Fair Oaks. Parents actually still live there, same house. Went to Jesuit High School here in Carmichael area. Graduated from there. Went to Chico State for 4 years. Right after that, honestly, just dove into brokerage. Everybody asked me kind of how I got into real estate, and just Marcus Millichap holds a career fair at kind of like Sac State, UC Davis. Met Ryan DeMar out there. He was the managing director at the time at Marcus Millichap. Kind of just led me into the industry and was over there for a couple of years, and then kind of jumped ship and was over here at Colliers. I was focusing at the time in kind of the Central Valley, Lodi, all the way to Stockton, Modesto. Was kind of getting sick of doing the drive out to the kind of Central Valley and wanted to focus here in Sacramento. So they had an opening here at Colliers to join a multifamily team, and just jumped over here in 2014 and just never looked back. Just still focus here on investment real estate and mainly apartment buildings.
Awesome. So straight up, just career fared into multifamily real estate.
You know what I wanted to do? I was a finance guy. You're doing stuff in class like accounting or whatnot. And I remember I had well, I kind of narrowed it down to, it was Franklin Templeton at the time and Marcus & Millichap. Did both interviews, and just pretty quick, I was like, I think I just want to go to the real estate. I mean, everybody I knew kind of in town, a lot of people were doing like residential. I had a good friend, Chris Lemon. He's at Cornish & Carey. He's actually the managing director. And he's like, you know what? It's a pretty good niche. I think you should jump in the apartments. And I always listen to that guy and just kind of jumped right into it.
Awesome. So, I believe that everyone has a certain set of strengths or spiritual gifts, superpowers, whatever you want to call them. So what are one or two spiritual gifts or superpowers that you have that have let you be successful as you are?
I don't know about any superpowers. Let's see, spiritual gifts. I've always been a math guy, so I enjoy kind of the investment real estate side, because you can look at a rent roll and pretty quickly just by doing a quick just simple addition, just seeing like where a cap rate would be or if a deal looks good. I mean, so on my side, always been really math orientated, and then I guess I'm just good with people. I generally enjoy meeting people. And then in commercial real estate, it's so funny. People always ask like, who are these buyers? Who are these sellers? And it's literally anybody and in between. I meet mom and pops just at their house or at a coffee shop, or I meet a bunch of contractors where they're working on site. And then you have the kind of REITs or institutional guys who are just like us. I mean, they're hired to do that job. So just being able to connect with people, because there's all different shapes and sizes in this business.
Yeah. So sounds like your network and just your ability to analyze a deal is.
Yeah, which everybody can do. I mean, nothing special, but it's just, I just generally enjoy it. It's fun looking at a deal and seeing what makes money, what doesn't, what you can do to improve the income. Do you mainly do the capital gain solutions, or do you invest in multifamily or real estate at all?
Yeah. So we right now I'm connected up with an investment firm, and we do a lot of stuff out of Cleveland. So that's kind of like my real estate investing side. And then I also am a luxury realtor out here in Newport Beach.
Oh,
And
cool.
so, yeah, so I leverage the Deferred Sales Trust in order to kind of secure listings and stuff, and set myself up above and beyond some of these other realtors who don't know what they're doing.
Right, right. No, it's good because I'm sure
Yeah.
a lot of guys who own homes out there, they're it's kind of like generational wealth, right? So they don't want to sell a home, and then once you give them an option like this, it's kind of like, hey, I can get out of the rental business, start
Yeah.
renting to guys like you and I, and
Yeah.
go into something.
Yeah, definitely. I mean, it's a totally interesting strategy, and we'll definitely dive into it. But I did want to ask you before that, what's like the number one secret to being successful multifamily broker?
So honestly, what they going back to, like you said, just jumped out of college, right into Marcus Milchap. They had always taught. They had a really good training program, and I always advise people getting in the business, if they're going to do investment brokerage, Marcus Milchap's a great way to start. I think the secret, just kind of investment sales 101, is just building a good database. So not spreading yourself too thin. Just picking an area. So Sacramento County. I know you guys do a lot in El Dorado County. So picking a market, say downtown Sacramento.
Yeah.
You say, hey, downtown Sacramento, I want to focus on 5 units and above. So just staying in that realm, say call it a 500, 1,000, maybe even 2,000 contacts, and just sticking with it. I mean, a lot of people, it's so easy to get distracted in real estate. Like you said, you do residential, or I'm sure some multifamily as well. But some people get pulled from every direction. They're like, hey, man, I have a gas station. Can you help me sell it? I have this. It's like you almost want to stay in your lane and stay in your focus, and stick to that 1,000 or 2,000 contacts, and just constantly getting in contact with them, and wanting to get in front of them. So we mainly, I mean, make a lot of phone calls to that target market, and it's just introducing yourself and wanting to get in front of them. I notice on kind of the smaller size, you get a lot more mom and pops. You get like 3 reactions. They really want to talk to you and get information from you. They just say, hey, F off, and hang up the phone.
Yeah.
Or they just say, they're polite and I'm not interested, but follow up. So it's just staying in contact with those same people over and over and over, and you start kind of seeing results.
So it really is just consistency and picking a market and not getting distracted with the shiny objects.
Exactly. And just not getting discouraged. I mean, there's so many people. It's funny. I'll call someone and they're just rude as hell, and then I'll talk to them the next year, and they're the nicest person I've ever talked to.
Yeah.
So it's not getting discouraged by all the hangups and stuff like that, and sticking with it. I think after they see your name, we used to joke about this in our old like boiler room days of just making a ton of calls. Some of them start becoming kind of your friend. You'll want to get through a bunch of calls, and you're on the call for 45 minutes talking about God knows what.
Yeah.
So these guys, I mean, sometimes they're older, sometimes they're young, sometimes they're bored, sometimes they're busy. It's just you become kind of friends with them, and that's the whole goal, just getting some FaceTime. It kind of during COVID just started doing like I used to not be very technological savvy and doing like Zoom and stuff, but now I'm like, hey, if I know you're busy, if you got a moment to hop on Zoom, and then they kind of feel like they know each other. Like even just talking to you for the last 15 minutes, if we were just on a phone call, I wouldn't know what you look like or what you're about. You know what I mean?
Yeah, absolutely. So that's interesting. And so, you kind of touched on it a little bit before, and when you asked me like what I'm doing, I was leveraging the Deferred Sales Trust. Are you using that at all as part of like your competitive advantage?
So I'll be honest, and that's one thing I wanted to talk to you about. So obviously there's the 1031 exchange option. Yeah. We have Triple Net guy here in our Sacramento office who actually works in the Bay Area office. And then Kingsbarn has reached out to me in the past. They're another DST. But from my understanding, your Delaware statutory trust is much different from your Deferred Sales Trust. What is the major difference between the two? Yeah. So are you aware of who Kingsbarn is?
No.
So Kingsbarn is just a company I believe they're out of Summerlin. They've reached out. Yep, exactly. And they'll reach out and say, hey, okay, if you have, your client selling a building, let's say, for example, $3 million, they're coming out with $1.5 million equity. Well, they'll go take that $1.5 million equity, put it into, say, one of their funds that they guarantee 6%. And they're buying, there's a medical portfolio, there's an apartment portfolio. Let's just say the apartment portfolio, they're buying 400 units in Nashville, Tennessee, brand new building. It's 1031 transferable, just like yours. Is that the same exact as yours?
No.
Or is it different? Exactly. So
So that's what you're describing is a Delaware.
Yep. Okay.
And a Delaware is basically just you 1031 into a REIT.
Right.
I mean, when it kind of comes down to it, right? It's the same concept. A deferred sales trust is completely different because a deferred sales trust has a number of advantages. Number one, it's not a 1031. So you don't have to follow the same 1031 rules. You don't have like kind. You don't have the time constraints like 45 to identify, 180 to close. So with a deferred sales trust, you can actually liquidate an asset, and it doesn't have to be commercial real estate. It can be any asset. So we're doing it with crypto. We're doing it with businesses. We're doing it with stock. We're doing it with primary homes. We're doing it with commercial real estate. It doesn't matter. You name it. I mean, we're working on an NFT deal right now. And so you can sell any asset that's highly appreciated, and it's like kind agnostic. So you can flip it into a super liquid, diversified asset portfolio. And like you can do stocks, you can do businesses, you can do real estate, you can do bonds, you can do crypto. You can diversify it into whatever you want, and then you get you can basically use it almost like a self-directed IRA account, and you can control the timing of it. And so the best way to do it is to just share a story. So back in the late 90s, this gentleman had done multiple 1031s and ended up with this $20 million apartment complex in Minnesota next to the Viking Stadium. And in 2006, he's like, look, I want to sell, but I don't want a 1031. I can't find an up leg. There's no deals that are penciling. There's nothing that is making any sense. He's going to have like a close to $3 million capital gains tax liability if he sold. He's pretty much fully depreciated all of his stuff. And so he's like, I really want to cash out the market. I think it's going to go down. So he ends up doing the deferred sales trust with us, sold the asset, paid off all the debt, and he put all the proceeds, including the $3 million in tax that he would have paid, into the deferred sales trust in a super conservative portfolio of bonds and mutual funds, earning at about 4%, 4.5%.
So real quick, closes the real estate.
You
engage a 1031 tax accommodator. No 1031. Okay, so there's nothing to do with 1031. Got it.
And it's a completely different section of the IRS code.
You get the money, you close it, you pay your debt, goes into your bank account. Tax season comes around, you got Uncle Sam knocking on your door. We go into the DST.
So pause. So before and here's the key of this whole thing. Before you close the property, you interject an unrelated third-party trustee. Okay. And it's almost like a QI. So like 1031s, right? You sell the asset, right? And the funds go to a QI for 45 days or 180 days, for however long it takes you to find your deal. And then they basically fund the deal. You've never taken constructive receipt. That's the key here. So you take off your ownership hat and you put on your lendership hat. And so now you are a lender. You're the bank. The trust turns around and writes you a note. Okay. And they will basically say, okay, hey, we're going to owe you $5 million, right? Whatever you sold the asset for, we're going to owe you $5 million. And then you're going to get a preferred rate of return based upon your risk tolerance, and we're going to pay you back. But in the meantime, right, you can kind of direct where you want the assets to be invested in, and you can partner with your trust. So going back to this guy, he sold the asset. Okay. He deferred all the tax. He paid off all his debt. So he's zero debt, $3 million deferred tax plus the proceeds that he had. And he's sitting on the sidelines earning at a 4% return based upon his risk tolerance. Okay. Mm-hmm. 2012 comes along, gets a call from the bank, and they're like, hey, you know that property you sold back in 2006? He's like, oh yeah, that one to that 1031 buyer who way overpaid. They're like, yeah, we're foreclosing on him. We want to know if you want to buy it back. He's like, how much is it? They're like, it's about 40% off what you sold it for. He's like, yeah, give me 3 days. Partners with his trust, does a JV partnership with his trust, turns around, buys the asset back for 40% off, and he got a brand new depreciation schedule on top of it. So he absolutely killed it. Now, that doesn't happen every day, right? However,
that is the home run story.
It is the grand slam story. But the deal is that if you're not positioned correctly, right? Luck is where hard work and preparation meets opportunity, right? So, I mean, if you're not prepared for it, right, you're not positioned correctly, you can't do it. So the fact that he's positioned right allows that story to be there. And there's more stories like that, where we had a woman who put $50,000 into Bitcoin back in like 09, or whatever, 08, 10, whatever it was. It went to 50 million. She took 5 million. She deferred 1.85 million, put it into a DST, used that 1.85 million to fund her friends like charitable education company for people in India, like underserved people in India, like a charity project. And then the rest of it's in a super, conservative portfolio waiting for her to do it. I got another guy who sold a business for 2.6 million, deferred 600,000 in tax, turned around, put it into a multifamily development deal out in Tennessee.
So let me pause you really quick. So let's use that gal with the Bitcoin, for example, $5 million, pulls it out. Her capital gains would have been 1.8 million. So as opposed to you go to your accountant, he says you owe 1.8 million on that. As opposed to paying it, you just deferred the entire thing into this. When does the IRS finally see their money? They never see capital gains or tax.
So it'd probably be best to just go through.
Downside, I guess, is what I'm missing.
Yeah. So it would probably just be best to go through just quickly the structure of it and how it kind of works. And you guys can all find out more about this by going to capitalgainstaxsolutions.com. We also have a mastermind every Friday at 10 a.m. Pacific time, 1 p.m. Eastern time. You can come, ask questions, learn about it, and all that kind of stuff. It's great. But just the real quick mechanics of it. So essentially, you have an asset, right? $5 million worth of Bitcoin. If you were to just sell the Bitcoin and liquidate, and the money hits your account, it's called constructive receipt. You trigger a taxable event. What we do is before you liquidate any sort of asset, we sit down with you and we come up with a risk tolerance. Okay, we educate you, and we get you comfortable. And then basically what happens is before you sell the asset to the trust for whatever you're going to sell it to the ultimate buyer for. So $5 million in Bitcoin, right? So we're going to sell it to the trust for 5 million. Okay. And then the trust is going to turn around and liquidate the asset to the ultimate buyer, whatever that is. So if it's commercial real estate, right, the end buyer, they're going to fund the trust with however they're going to fund cash financing, whatever.
Creating a trust and putting it in there, essentially.
So in the middle of the unrelated third-party trustee, that's super key. Okay, they're not related at all. Okay, and then when the dust settles, okay, the people take their property and they walk away, or their Bitcoin and they walk away, or whatever asset it is that they have purchased, they walk away. They get the asset. Okay, the trust is funded with the cash. Okay, so we got the cash in the trust, and then the trust turns around. They write you a note for that amount plus the preferred rate of return, and it's IRC code 453, which is a seller carryback. So they're basically just carrying back the paper at 100% down payment, including all of the deferred tax. And then we take that money and we invest it into whatever assets you want. And so when you find a deal, like a real estate deal that you want to go back into, you don't have to do it in 180 days like a shotgun wedding. You can wait 6 years or 1 month or 4 months or whatever. It doesn't matter. You have timing control, which is amazing. And the fact that you can go from real estate to stocks, or from Bitcoin to real estate and stocks, or from stocks to real estate and Bitcoin and hard money lending and notes or whatever, it doesn't matter. As long as you're just anything you can invest in really is a self-directed, like IRA account type of deal, the business trust can do. And so you basically have this vehicle now that allows you to defer the tax, invest it in whatever investment you want, and go from there. And so, the question that you just asked, which is, the question that everyone asks is, okay, well, then what's the downside? And the downside is it's complicated. Honestly, like it's so customizable that we have to sit down and we have to go through and educate you and talk to your CPAs and talk to your attorneys and your estate planners and everything like that to figure out, okay, how does this actually fit into your current situation, and what is the best solution, or what is the best combination of solutions that we can put together in order to make this whole thing work. It's kind of like a Rubik's Cube. Like I do a little piece, right, and then I throw it to Matt, and then Matt does a little piece and then throws it to Brett, and then Brett does a little piece and then throws it to Jake, and then the client does a little piece, and we all try and get in this whole thing together using a combination of different things. So I'm going to pause there and see if you have any questions.
No questions, but you had asked earlier if I had been leveraging this. I haven't, but I will in the future. That's why I got so many questions on it.
Yeah.
Anytime I think I have my head wrapped around this, or like the Delaware, like I was telling you, I get questions from a client. I'm like, oh, wait, I never even thought of that. So what I did want to know is, let's say I just sold a property and was doing this, and I had capital gains, and let's just say 200,000.
Yep.
Aren't I going to get maybe audited when my check doesn't go to the IRS when they notice that I deferred it or not?
Cool. So here's the coolest thing. So the coolest thing is that there is a 26 years now track record. Okay. Thousands of closes, over 3,000 closes. There's been 12 audits, random audits from the IRS.
Yeah.
Just with people that have had deferred sales trust. The biggest deal was a $125 million apartment complex out of San Diego. All of them, no changes, no findings. So that's like a home inspector coming in and being like, hey, your house is perfect. Don't change a thing.
It's never happened.
That's never happened. We're batting 1,000. Not only that, but there's been 2 formal audits from the IRS to come in who have taken the estate planning team and the creators of the trust, and who have done a deep dive on the entire structure. And they've come back and they've said it's perfect, no changes, no findings, twice. And then it was audited by FINRA, and again, no changes, no findings. So it's been tested through the ringer. It's got a 25-year track record. There's thousands and thousands and thousands of closes, and it's never been changed by the IRS. Not once. People
so it is deferred, right? It's being deferred. When do you actually pay the taxes? Let's do an example. Let's just say, same instance, sell the property, make 500 grand, 200. You throw the 200 into DST. Now in 3 months, can I take that 200 I deferred and now put it back into real estate or buy cryptocurrency? So you weren't paying the taxes on it, so you just deferred into something whenever you're ready to do it. Yeah.
So you just would direct your trust to go ahead and either partner with it or purchase the asset. And there's a whole bunch of different ways to structure it based upon your unique situation. So if you're interested in that, you definitely want to come to Capital Gains Tax Solutions and kind of get a little bit of a better idea about that. But most of the notes are structured at a preferred rate of return of around 6 to 8%, and they're 10-year notes. And at the end of it, you can just renew the note. So most people like to pay the tax as the 12th and never, and they just continue to defer it. Not only that, but when you pass, the trust can actually just be transferred to your children. And what's even cooler is that not only can it transfer to your children, but the assets are actually outside of the taxable estate. And so it can avoid the 40% death tax for these ultra high net worth individuals who are 22 plus million as of right now, as the recording of this podcast before 2022. But that's 22 million, but they can move that asset outside so that their children don't have to pay the 40% estate tax upon their death, which is the even bigger elephant in the room. The capital gains tax itself is one thing, but the estate tax is a completely other thing. And as you know, with a 1031, the stepped up basis, is great for capital gains tax, but it does nothing for the estate tax. Mm-hmm. And so your children can just step right into the trust and maintain it the exact same way. So it's amazing. But I did want to ask you, going to that, what has been your biggest frustration with a 1031 in the capital gains tax deferral?
Just the timing. Everybody freaks out, the 45 days and then, or, we'll have a buyer and a seller doing a 1031. So everybody's adding time to the contract and then just tripping over each other a little bit. So yeah, biggest frustration is just the kind of the hourglass. It's ticking down and they need to find something. They get a little stressed and start kind of overthinking it.
Yeah.
And I wouldn't say it's like the biggest frustration when you're waiting for, if you're talking to someone they're considering selling because they've obviously got to consider all these tax solutions. But yeah, it's mostly just the time frames.
Yeah,
Stressed out,
absolutely.
and then we're kind of always managing, their expectations. So if somebody's stressed out, it's stressing you out a little bit.
Yeah, no, absolutely. And I mean, there's 2 to 3 answers that I get every time. It's timing and, trying to make sure that, the tax, tail isn't wagging the investment dog. So, making bad decisions off of trying to defer the tax and not really doing all the DD and just getting into something because they're running out of the time.
Sure. You can tell sometimes. I don't think I've dealt with somebody who's doing a 1031 that didn't, end up doing well with the property or whatever, but you can tell when you see these comps and they sell at a high price, and then you talk to the guy a year later and they're like, yeah, I just had an exchange and I had to do it.
Yeah.
But I mean, honestly, if anybody's purchased in the past, since like 2012, they've done all right. It seems like real estate's caught up, knock on wood. I mean, we might get off this call today and start seeing it decline, but what are you guys seeing out in your area? You do mainly residential. So with the interest rates jumping so much, in commercial, it's moving a lot slower. So I check every week and it's like 4.35 this week. It was 4.1 last week. But you guys, from my mortgage broker, tells me that the residential just jumps so much quicker. And they're what, 5.5 right now? Are you
Yeah, they're going up.
Are they seeing it? Are you seeing it affect your area? I mean, it's a pretty high net worth area, but
yeah. So it's a little bit interesting over here just because, a lot of these properties are going anywhere, in the $4 to $12 million range, and if you get into the ultra high net worth, you're in the 20s and whatnot. And a lot of these guys just have cash, and so you're kind of dealing with a whole different ball game, like right now with those particular buyers.
What are those guys on the TV show? Do you run into the Altman brothers or whatever?
You know what? I did run into some people from the Oppenheim group, the Selling Sunset. But people, please understand that selling real estate is nothing like selling Sunset. That's a
haven't sold a Sunset yet.
I haven't sold one Sunset yet. That's a fact. So
can you defer a Sunset into a capital gain solution?
you can sell a Sunset if you take a picture of it and turn it into an NFT.
There you go.
Yeah. So cool. All right. Well, hey, Matt, let's get you into the lightning round, man. And this has been a great conversation, but I know you're busy, so I'm going to make sure be respectful of your time over there. So what's your favorite leadership quote?
Ooh, leadership quote. One, I like the one you said earlier where hard work. What was it? Hard work meeting perseverance is luck.
Yeah. Hard work. Luck is what did I say? Hard work. Hard work and preparation meets opportunity is luck.
I think you stole that from a movie. I've heard that before.
Coach, my coach in Granite Bay had that written on the wall in our weightlifting room. Luck's where hard work meets opportunity and preparation.
I'm going with that one.
Yeah, that was a good one. All right, what's your favorite book?
Ooh, How to Win Friends and Influence People. I suggest that to everybody. It's so funny. I'll read it again and again, and it's all so simple and easy. It just how to work with people, and as soon as you think you kind of got it down, you read it and you're like, wow, I totally forgot this, totally forgot that. Like, for example, I don't think I've said Pierce many times in this conversation, but every time I read that book, they say when you say people's names, I mean, it gives them like serotonin in their head and just hearing their name, and conceptually they start liking or more, they become a little happier and they're a little bit more interested in what you have to say.
That's a great one, Matt. Thank you so much.
Thank you, Pierce. I really appreciate that, Pierce.
You're welcome, Matthew. Thank you.
Hi. Hey, Pierce, I appreciate that. I'll talk to you soon, Pierce.
really grateful for that quote there, Matthew. Thank you so much.
So How to Win Friends and Influence People. I'd suggest it.
Great book, Matt. So let's what are you most curious about right now?
As far as what you guys have to offer, or just investing side, or what?
In general,
honestly, I've been just trying to. I do a lot of these little multifamily deals, and I've been trying to invest in them myself. After just having a couple successful years, I let kind of some money sit in the bank and just kind of watch the market. And right now, just doing like a little deals in Midtown, downtown Sacramento, and I really like South Lake Tahoe because
Yeah.
I know the markets. It's fun to go see it in South Lake Tahoe. I still think it's undervalued, and so I live downtown, so I like stuff that's close to me. And then obviously a market like South Lake, I'm trying to stay in those two areas and just do little deals. I was enjoying like the kind of 2 to 4 units because interest rates were so low, and the down payments were less. But now I think you get a little bit more of a bulk buy. I just invested in a little 8 unit in South Lake Tahoe. It's all studios, did it with a client. It's funny, these deals, they'll sit on Zillow. Like we cold call all the time and try to find owners, but sometimes it's just a random deal that you see on Zillow. That's how we had gotten this one. So
Wow.
put attention in those two markets. Yeah.
Yeah. Well, hey, if you find something in South Lake Tahoe, I'm all about it. I love that place.
It gives you an opportunity to go ski or just go hang on the beach up there.
Yeah. If you guys don't know about South Lake Tahoe, Google it and go stay at one of Matt's places or something.
There you go. If we turn to an Airbnb.
Yeah. No, South Lake is one of, I mean, it's what proves there's a God. It's amazing.
We really do take it for granted. All the people come from out of town and they've been to lakes in just wherever, Idaho, and they're like, wow, this is literally the most beautiful place.
Yeah, it's amazing.
And back to what you said earlier, that you were investing in Cleveland. Is it Ohio? And why out there? My cousin just moved there to work for McCarthy Construction, and I'll see stuff again on Zillow for like $50,000 a unit, and I'm kind of scratching my head like, hey, what's the deal here? I know the rents are lower, obviously, but are you guys having some success out there? And is it multifamily or?
Yeah, it's a good cash flowing market, and it depends on the deal, of course. Yeah, a couple different multifamilies. We're actually buying one right now in New Orleans. That's a duplex that we're going to turn into a functional fourplex and rent out to some traveling nurses and try and figure out the Airbnb. They're starting to crack down a little bit on the short-term rentals, like everywhere else around in the world. But yeah, the property values are $100,000, like $200,000. To pick up some properties, and if you do, you can cash flow, pretty nice on a property. You can fix and flip them. There's just a lot of exit strategies out there, and it's low, so you can, your dollars will go a lot further. Multiple, and your percentages are about the 30, 40, 50%. So you buy a property for $50,000, you put 50 into it, and then you sell it for 150. Like, your risk and your reward is pretty good out there. We're definitely trying to expand out into other markets as well. And actually, there's an 84 unit apartment complex that's about a 9 cap in Cleveland right now. I should send it to you because you might find it interesting. Yeah. Absolutely.
How is it flying over there? Do you get a direct flight from Los Angeles?
You can, yeah. Sometimes you'll get rerouted depending upon where you go or when you flip it. Yeah, there's definitely direct flights from there.
And the 84 unit, for example, are you like an hour from the airport once you land, or is it a 2-hour drive?
So that one is in, I think that one's in Cincinnati, actually. I'll have to find out. I'll have to go back and look to see exactly which city that one's in, and I'll shoot that over to you.
And is your goal and stuff like that to even go see it, or you just want to have a team where you don't even have to see it? You just have a good lender, a good manager, and a good inspector, and just
ideally, that would be the case on something like 84 units. I mean, he's trying to sell it for $7.5 million, and I think it's bringing in close to $800,000 a year, like NOI. So I don't know. That's what they say, of course, right? So you have to.
Go to a broker. There might be some broker magic going on in there.
Broker magic,
deal with institutional guys. They're like, dude, no, these excuses are like, well, what do you mean? Like, I got to pay somebody outside. I got to do this.
Yeah. Definitely. So, I'll definitely send that over your way. And guys, definitely get out to the capitalgainstaxsolutions.com if you want to learn more about the Deferred Sales Trust, and join our mastermind every Friday at 10 a.m. Pacific time and 1 p.m. Eastern time. And Matt, where can people connect with you?
I got my email address right here at the bottom, or maybe over here. Matt.Sarro@colliers.com. You go to colliers.com/Matt or you can always reach me on my cell phone, which I think they put on there, or 916-616-5267.
916-656?
916-616-5267.
5267. Okay. Or you guys can connect with Matt at matt.sarro, Sarro, at colliers.com, colliers.com. You can go to their website. You can just call Matt. If you want to sell a building, Matt's definitely one of your guys.
There we go.
Cool, man. Well, hey, listen, really appreciated all that we got to talk about today, man. It was a lot of fun.
Yep, good getting to know you, and appreciate you having me on the show.
Yeah, you too. And everyone, Matt will be on the mastermind, so if you want to come there, you can chat with him there. Shameless plug. Holding them accountable. So so there we go, guys. All right, cool. Well, thanks again, everybody, for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe that most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is the best way to create, preserve, and grow your wealth. Please rate, review, and subscribe, guys, and we will see you on the next one.
Right on.
Have a good one, guys. See ya.